The United States economy boomed in 2024. But if you ignore the data and ask regular people, many of them will say they're not feeling the boom. This is where some people say that the data is just outright lying about what's happening, or that the data is being politically manipulated one way or the other. But the reality is that there's a hidden cost to the economic growth that we're seeing that most people are completely overlooking. Take a look. Our economy, which is measured through a number called GDP, grows when people go out and spend more money. If you go to Chipotle and spend a lot of money, somebody at Chipotle is benefiting. Now, the data tells us that our economy grew in 2024. But then if we dig a little bit deeper into the data as to what helped the economy grow, what we see is that yes, Americans did in fact spend more money in 2024, even if those same Americans didn't necessarily have the money to spend. In an ideal situation, this would not be a problem because you would be making more money so you can afford to spend more money. But that's not the case that we're seeing today. There's two things happening. On one hand, we have wealthy people that have seen their asset value skyrocket, so they're able to spend more money because their wealth has gone up. Versus the average person who's been relying on their salary has not seen an increase in wealth because their salary has not kept up with inflation. That means we're seeing more and more people spend money that they can't afford to keep spending. And now you can start to see how this is creating a unique challenge in our economy. Now, before I go any deeper, I want to say a few words about our sponsor, Rocket Money. I used to use spreadsheets to track my personal expenses, which was fine. It would just take a long time. But now Rocket Money makes it so much easier. Rocket Money is an all-in-one personal finance app that helps you cancel your subscriptions, lower your bills, and manage your money better. And there are two big reasons why I like Rocket Money. First, they show you where your money is going. Once you connect your financial accounts, Rocket Money will show you where all of your money is going at all times. And as an added benefit, they also show you the different categories where you're spending your money. That way you can see if you're spending too much money at Benihana's. And second, it can help you lower your bills. When you connect your financial accounts to Rocket Money, it will show you all of your subscriptions, and it will also show you when your subscriptions are going up in price. Now, I know that canceling subscriptions can be a pain, but Rocket Money makes it a whole lot easier because they can cancel those subscriptions for you. I'm telling you from experience because my wife signed us up for a meal delivery service, which we stopped using, but we're still getting billed for. And so then I just logged into Rocket Money and I canceled my subscription right from the app. But don't just take my word for it, try it out for yourself. So if you want to save more and spend less, you can join the 5 million members on Rocket Money. All you got to do is go to rocketmoney.com/minority-mindset, or you can use my link down in the description below. That way you can get started for free. Now, to really understand how our economic dynamics have been shifting, let's take a look at how our economy has changed from 2014 to 2024. And we'll compare that to household income between 2014 and 2024, and we'll compare that to stock prices over those same years. In 2014, our economy was about $17.6 billion large, and by 2024, our economy had grown to around $29.1 billion, which means our economy grew by around 65%. And remember, our economy GDP is a measure of all spending, which means our spending increased quite a lot over those 10 years. Now, you might assume that if our spending, meaning our economy, has grown by this much, incomes would have grown by more than that, right? Well, let's take a look. The median household income in 2014 was around $53,000. In 2024, the median household income is expected to be something around $84,000. I kind of rounded up here in estimations, but we don't know for sure yet, but it's expected to be around $84,000, which means the median household income in America over this decade grew by around 56%. You can start to see a little bit of a problem. Incomes grew, but not as fast as our economy. But now let's compare that to investment values, more specifically the stock market, and even more specifically the S&P 500, which is a group of the 500 largest companies in the stock market. And what we saw is that in the year 2014, the S&P 500 grew to around 2,000 points. And by the end of 2024, the S&P 500 had grown to around 5,850 points, which means the stock market grew by around 195%. So now you can start to see investors became wealthier. The average person's income didn't grow as fast. And so it's easier for wealthy people to spend more money, but you can start to see how the average person isn't necessarily keeping up. So if we come back to this diagram, everybody in the world will tell you that economic growth is good. Who wants to see a recession? Unless, of course, you're an investor sitting on cash who can take advantage of the opportunity. But in general, economic growth is good. But in order to see economic growth, you have to see more spending. And the problem is we're seeing a lot of people increase their spending faster than their incomes. Now, I get it that there are a lot of things that go into GDP. For example, one thing that I did not mention is that the largest spender in our economy is not you and me, it's not Amazon, it's actually the government. And we have seen the government ramp up their government spending, especially since the pandemic, which has created a growth in the economy. But that growth in government spending didn't lead to a proportional growth in our economy. But I have already talked about that, so I'm going to ignore that for this video. You can watch some other videos to learn more about that. This is why I always say it's very important for you to understand what's happening here. That way you understand the importance of understanding how to win in our economic system. So let me wipe this off and show you how you can actually win. You may have seen me diagram this before, but this will help explain what's going on in our economic system, because I believe that there are three main entities in our economic system. They are consumers. Every single person is a consumer. Rich people, middle class people, poor people are all consumers because we all need to eat, we all need clothes, and we all drive a car. So everybody's a consumer. You have consumers, you have investors, and then you have businesses. Businesses are the places where we go to spend money. So when you go to Chipotle, that's the business. When you go buy a shirt, that's the business. The investors are the ones that own those businesses. So how does this work? Well, consumers go to businesses like Chipotle and they spend money to buy the extra guac. But who does that benefit? It might benefit the employees a little bit because you continue getting your salary, but all the extra dollars, all the profits go into the hands of the owners. Who are the owners? The owners are the investors in the business. Because if you own Chipotle, if you're an investor in the Chipotle stock, well, when there's profits, those profits go into the hands of the investors. So in this economy, in this economic system, money flows to the investors. They flow to the owners of the assets. They flow to the owners of the businesses. And we live in an economy that runs on spending. Remember, our entire economy is measured through a number called GDP, which is a measure of all spending. Our economy runs on people spending money in other businesses. Who does that benefit? Investors. And then what we've seen happen is inflation. Inflation means that when you go to Chipotle, you got to spend more money. Consumption becomes more expensive. So now you as a consumer are spending more money at these businesses, which means more dollars are flowing into the hands of the investor. Now, how do you get the money to actually consume? Well, most people are getting their money just from their job because they work to get a salary, they work to get paid. And this is the problem that we're seeing, is that the money that you're getting from your job is not growing fast enough to keep up with all the inflation. Sure, you've probably gotten a raise over the last 5 years. But chances are, if you are one of the median average people in the country, your raise has not grown fast enough to keep up with inflation. The median household income in America has grown by around 20% in the last 5 years. Inflation, reported inflation, is at around 23%, which means for the average person, your income from a job has grown, but not fast enough to keep up with the growing cost of living. And that's where we start to see this divide. Economic growth is good, but what we're seeing right now is that the economic growth that we're seeing is through an increase in spending through money that people can't necessarily afford to spend. We've been seeing a lot of people go deeper into credit card debt. Credit card debt is at the highest levels we've ever seen, and credit card defaults are now at the highest levels that we have seen since 2010 during the Great Financial Crisis. But that's not all. If you've been reading market briefs, you know that we're also seeing a lot of different shifts in our economy. For example, here's a chart from the Federal Reserve Bank which shows you that wage growth in America has been steadily falling since a little bit after the pandemic. Now, a lot of people are hoping that a new President-elect Trump, will be able to turn the economy around with his new economic plans, but of course, we don't know exactly what's going to happen just yet. But this is where what's important for you is to understand how you can find the investment opportunities. How can you find a way to put your money to work? And this is where you have to know your game. If you're just going to invest your money into something like the S&P 500, you just ABB, always be buying. You don't worry about all the other market swings that are happening. But if you want to be a little bit more involved, again, this is only for those of you that are willing to take on the additional risk. If you want to be a little bit more involved, take on more risk for more potential return, this is where you want to look for unique investment opportunities. For example, I'll go over a few proposals that Trump has talked about. Now, of course, nothing has been passed yet, but what I want to do is to get your mind starting to think like an investor so you can start thinking about opportunities as opposed to just emotions. You've probably heard that Trump has been campaigning on things like doing mass deportations of illegal immigrants. You might have heard that Trump has been talking about doing big deregulations on certain industries like financial services and oil. And you might have heard that Trump wants to do tariffs. By the way, if you want to stay up to date on the financial news, Market Briefs is a free financial newsletter that I created to help you with that. I have the link for you down in the description if you want to join. But a lot of people look at this as an emotional thing, as a political thing. I want you to understand how this can potentially create an investment opportunity. Now, I get it, I'm just a random guy on YouTube, and I'm going to show you how this can create potential investment opportunities. But although I am a random guy on YouTube, one thing that I have found is that there might be an investment opportunity that is good, but it may not be good for me. And so to identify really a good investment opportunity, I like it to meet these 3 pieces of criteria. Number 1, it must make legal sense, meaning it can't be illegal. Number 2, it has to make financial sense, meaning I have the opportunity to make money. And number 3, it has to make moral sense. There are certain investments that I don't make because it does not fit my moral compass. Now, I'm not going to sit here and tell you what you need to believe. There's a lot of people on YouTube that do that. I want you just to understand that if you want to find a good investment, I want you to understand this. That way you can find something that fits your moral compass as well. Now, that being said, let me talk about these 3 things because these have hit a lot of headlines, starting with things like mass deportations. Do you want to know who likes the idea of mass deportations? Well, prisons. More specifically, private prison companies. Now, if you're wondering why, it's because if there are mass deportations happening, that means a lot of people could be getting arrested. And where are they going to be sitting? In those private prisons, which means those private prisons might be making money from the government while they're housing or detaining those illegal immigrants. Take a read. Private prison stocks soared after President-elect Donald Trump promised that there would be mass deportations. Now, of course, before you go out and throw your money into anything, you want to make sure you do your due diligence and do your analysis to actually analyze the stock, to make sure it's a good company that you're actually investing in. Just because there's an opportunity doesn't mean that a particular company is going to go up. You have to actually analyze the company as well. That's where financial education comes into play. Then we can look at number 2, which is deregulation. What does deregulation mean? In general, deregulation means it's easier for a business to operate. It's easier for business to make money because there's less rules. And Trump has talked about deregulating the financial service industry specifically, which means that you could see certain banks, certain investment institutions, certain hedge funds be able to operate with less rules, less restrictions to potentially make more money. Investors bid up bank stocks following President-elect Donald Trump's victory in the 2024 presidential election. The rally was immediate and widespread as the market expects less severe government regulation starting in 2025, including a more supportive regime for approving mergers and acquisitions. And then of course we have tariffs. Now, I'm not going to explain what are the potential economic consequences or benefits from tariffs. I've already done a whole deep dive on that. You can watch my video on that. But the goal with tariffs, according to Trump, is to bring manufacturing back in the United States. Now, let's just go with the hypothetical. Let's assume that we see more manufacturing happen in the United States. Who does that benefit? Well, one industry that it could potentially benefit is the railroad industry. Because if we have more plants, more manufacturing plants in the United States, they will probably have to ship goods from one place to the other. And what is one industry that can help with that? The railroad industry. Take a read. The CEO of CSX, a railroad company, says, from our standpoint, actually, as long as it's coming into the United States, we're going to move it somewhere. If tariffs change the trade portfolio, as long as the economy is growing, we're going to be a part of it. Now, again, my goal is not to tell you what to invest in. My goal is to get you to start thinking like an investor, because the reality is this is how our economic system works. The reality is the average person's income has not kept up. And the reality is the average investor has become disproportionately wealthier because of this economic system and because of inflation. Now, inflation is not going away, but in order for you to win in this economic system, you have to be an investor, which means you can't spend all of your money here at Chipotle or at Gucci or at BMW or wherever else you're spending money, which means you have to have money to invest. Now, when you start putting money aside to invest, you have to know where do you invest your money. Maybe you just follow a passive investing strategy. You just throw your money into the S&P 500 every week, every 2 weeks, every month. You don't worry about it. Great, that's fine. You don't worry about any of this other stuff. If you want to find more unique opportunities, you're okay taking on a little bit more risk for more potential return. Again, nothing is guaranteed. Nobody knows if we're going to enter a recession this year, next year, the year after that. Nobody knows when we're going to see a market crash. There's more risk involved here. But if you're willing to take on that additional risk, now you need to start thinking like an investor and start to understand where are the potential opportunities. So when you start to hear about things changing in the economy, you want to start thinking about the opportunities, but then the investment must also fit this criteria. Make legal sense, make financial sense, and also make moral sense for you. And again, if you're looking for some additional tools to get you started on your financial journey, you can check out the links that I have for you in the description. Let's talk about tariffs. We all know that President-elect Trump has promised big blanket tariffs starting in 2025. But what does that exactly mean? Well, before we get there, let's understand why Trump wants tariffs in the first place, and according to my research, there are 3 big reasons. Number 1, he wants to bring manufacturing back to the United States. Number 2,